That takes us to our talk of the tape. So is the stock market's indecisive start to the second quarter yet another fleeting pause on the way higher, or the stirrings of the first proper pullback in 5 months? Let's ask Lori Calvasina, RBC Capital Markets head of U.S. equity strategy. Lori, good to see you.
Thanks for having me.
You have said, among other things, that some of the sentiment stuff that looks a little elevated has been screaming for a pullback.
Yeah.
Is the market listening, or I guess are some of the other inputs still keeping it afloat?
Well, look, it feels like it's screaming a little bit louder this week, but it's been, whimpering or, kind of fussing a bit for the last few months. So, I think time will tell. I do want to see how markets react after the next inflation print. So I'm wondering if we're just seeing a bit of angst in the run-up to that report. But I think, by and large, what I think is interesting is it's not sort of a defensive underbelly to the market, right? I mean, you talked about how materials are doing well, energy, industrials, that's happening even in context of tech bouncing back a little bit. The small caps, bottomed relative to large back in early February. Nobody really seemed to notice that.
Yeah, sure.
So I think this is a market that's still trying to rotate, trying to get a little bit more cyclical, has some angst over inflation in the Fed. But at the end of the day, it's a different setup from August. Back in August, we were all worried that we're going to be in economic purgatory forever. Now we're all bemoaning the hot economy and what that means for Fed policy. So,
right.
We'll see. There's good and bad out there.
Yeah, for sure. And to your point about this really active debate about what the Fed should do, what it will do, what it's going to mean. Actually, we have some comments on that, both from David Einhorn from interviews today from him from Greenlight Capital, as well as Steve Cohen of SAC.
How many times are they going to cut this year?
I think fewer than are priced in right now.
So fewer than 3?
Sure.
You think they cut? Do you think there's a chance they don't do anything?
There's a chance. I think inflation is reaccelerating. I think there's a lot of indication of that.
I think the market expects 3 cuts. I think that's the number. I don't disagree with that. I think inflation's been, somewhat contained. And I think, ultimately, what it'll come down to is that a true statement or not. We think the Fed thinks they, eventually is going to come down to 2%
right.
inflation rate.
What do you think?
I think that's going to be hard.
Yeah, so that pretty much sums up, where the front lines of this debate are. So I guess that we go in sequence. What is the Fed inclined to do? Is it doing it for good or bad reasons, and how much does it matter for the market?
Look, I think that the reasons matter. I do think the Fed is being patient here. I think that's what I keep hearing in all these speeches, and I think we want them to be patient. They were sort of, given a lot of grief for moving too late with the hikes, right? So don't we want them to be patient with the cuts? Doesn't the market actually want inflation to be contained? I think if they weren't being patient, I think they would be getting beaten up for that. So I think at the end of the day, they're being data dependent. They're watching the data come in just like everybody else. They're being pretty transparent and honest right now. And I think those are all good things. And I think if inflation is getting out of hand, holding back is probably the right decision.
They seem to believe, and, Powell's comments today, he reiterated more or less that they think that the disinflationary trend is probably still in effect. But what do you actually think? Because you do have that difference of opinion that we've seen this sort of floor and a flare up in inflation.
Yeah.
At the same time, you're seeing things like ISM services today, still positive but weaker than expected, prices paid coming down. Are we just seeing another shift from services back into goods? And is it muddying the picture?
I think the picture is getting a little bit muddier. Our economists and rate strategy team, they were looking for 5 cuts at the beginning of the year, and they've now dialed that down to 3. And I think part of what really pushed them to do that was you were starting to see some pressure on the goods side, right? So I think that was a little bit different from what we'd expected in the beginning of the year. I'm going to be really curious to see what companies are saying in this next reporting season, and somehow we're right on the cusp of another reporting season. It felt like the last one took forever. But I guess I wasn't totally shocked by some of these inflation prints, just on the basis that I was hearing companies still complaining a lot about costs in real time and really kind of begrudgingly loosening their grip on the pricing power element. So I felt like you could sort of look back at that last reporting season and see sort of seeds of, kind of ongoing inflationary pressures in some of the corporate comments. So it'll be interesting to see get that boots on the ground read in a few weeks.